let's get started with some ratio analysis. Right, guys, now before we look at today's questions on ratio analysis, please remember, as grade 12 students, you should at this stage be able to calculate ratios correctly and obviously provide relevant comments on your calculation. The comments could include advice that you may need to give to the directors of a company, advice that you may need to give your shareholders, as well as your opinion based on your calculation. So remember, with ratio analysis, there's always substantiation, and that substantiation comes from your calculation. So let's get started. Right, the first question that I'm going to look at, we are going to be completing the following. So I just want to quickly browse through some of the questions. We're going to do a bit of calculation. So we're going to calculate the current ratio, the asset test ratio, net asset value per share, as well as the debt equity ratio. And once we've done these calculations, we will then answer the analysis part of the question. Right, so let's start by looking at the information that is given to us. Very, very important. So I'm given an extract from the income statement. It's always nice in the beginning to get familiar with your information before you rush through the questions. So that's exactly what I'm doing right now. So back to the information, an extract from the income statement. Then I'm given a balance sheet for 2009, which is my current year, as well as 2008, which is the previous financial year. So I've got a balance sheet in front of me. If I move further down, there's the entire balance sheet, so quite a bit of information there. And then I'm also given some additional information. So let's look at the additional information. So information A tells me about new shares were sold during the financial year. So obviously I'll come back to that when required. Then information, the next bit of information, earnings and dividends per share, right? So again, they're giving me information for 2009 and 2008, the current year and the previous year. Then I'm given certain financial indicators. So I'm given return on shareholders' equity. I'm given percentage return on capital employed, as well as the net asset value per share. And I obviously notice that there's a question mark there. Okay, so that figure was not given to me. They're also giving me the price of shares on the JSE has fluctuated between 680 cents and 780 cents over the past year. Okay, now one bit of information that I added on that for some reason was not included in this particular slide. So 417,000 shares were issued at the end of the year, and here I'm referring to 2009. Right, so we're now ready to start with the questions. Again, guys, I'm reminding you, have those calculators at hand so that you can work with me. So the first calculation is quite straightforward. We're going to calculate the current ratio. So let's fill that in. So the first calculation, calculation 1, we're going to calculate the current ratio for 2009. Okay, now remember guys, the current ratio, you don't have to write down the formula, but I'm writing it down. Current assets is being compared to current liability. So straightforward, grade 10 accounting, you've done this many times before. So obviously we're going to go to our balance sheet. So let's do that. Let's go to the balance sheet. And remember, I'm looking at 2009. My current assets is given to me already at 320,000, and my current liability, okay, there's my current liability here, guys, 390,885. So let's take those figures through. Okay, so my current liability, 390,885, and my current assets, I think it was 320,000, but let's confirm, that's right, 320,000. So let's fill that in. Okay, 320,000. Right, so obviously in order for me to calculate a ratio, the right-hand side must always equal to 1. So divide by 390,885 to get 1. I obviously do the same on the left-hand side, divide by 390,885. And let's now get the calculator out. Okay, so 320, my current assets, divided by 390,885, and that gives me a ratio of 0,8 is to 1. Okay, I'm rounding off to the first decimal, so 0,8 is to 1. Right, so that is my current ratio. Should have been straightforward, and hopefully you got that answer before I did. Right, let's move on now to the next calculation. So the second calculation wants me to calculate, let's go back to our question. So they want me to calculate the asset test ratio. Right, so let's do that. My asset test ratio. Okay, so remember guys, asset test ratio obviously looks at my current assets without stock. So in the event of me not being able to sell my stock, can I still pay my short-term liability? Can I still pay off my creditors? Very similar to what is happening right now in many businesses out there. Remember, at the moment, businesses cannot operate as normal. So there's obviously no cash flowing into the business from selling stock. So in this case, does the business have enough cash in their bank account and from their debtors in order to pay current liability without having to sell stock? Right, so once again, your formula, current assets minus stock, is being compared to your current liability. So let's do that calculation. We're obviously going back to our balance sheet, or before we go to our balance sheet, we can use some of the figures that we had at the top. So my current assets, I know, is 320,000 from the previous calculation, minus my stock figure. So let's go back to our balance sheet. Right, there's my balance sheet, and inventory is obviously my stock figure, which is given to me at 251,250. So let's fill that in. Okay, 251, so minus 251,250. And I'm obviously now comparing this to my current liability, which I can take from the previous calculation. I don't have to go back to the balance sheet. My current liability, 390,885. Right, so let's do this calculation together. And again, I'm going to just show one more step. So I want to first take my current assets, 320,000, minus my stock figure, which is 251,250, and that gives me 68,750. So 68,750, and I'm obviously comparing that to 390,885. Right, so once again, in order for me to get my ratio, I'm going to divide by 390,885, do the exact same thing on the left-hand side of this ratio, divide by 390,885, and I'm now getting a ratio of, let's get the calculator out again, so 68,750 divided by 390,885. Let's fix that, 885, and that gives me a ratio of 0, I'm rounding off to the second decimal, so 0,2 is to 1. Okay, so I know we said we'll do interpretation a bit later on, but let me quickly explain what we've just calculated. So remember, at this point in time, my current assets show me, right guys? Let's just go back to question 1. My current assets show me that for every 1 rand, okay, so for every 1 rand of current liability, okay, the amount that I'm owing, for example, to my creditors, I only have 80 cents of current assets. Okay, now that's a bit scary because obviously I don't have enough current assets to cover my current liability. And if I look at the asset test ratio, this is now even worse. So for every 1 rand, okay, so for every 1 rand of current debt or current liability, I only have 20 cents without stock of current assets. Okay, so clearly this business we can see is going to have liquidity issues. They are not going to have enough cash to pay off their short-term debt. Right, so let's now move on to the next question. The next question wants us to calculate, let's just quickly go to the question, wants us to calculate the net asset value per share. Right, net asset value, NAV, and once again for 2009. So let's go back to our answer sheet and let's do the net asset value. Just want to extend that page quickly. Right, so question 3, NAV, net asset value, again for 2009. So remember guys, the net asset value, you are taking your ordinary shareholders' equity and you are dividing this by the number of shares that were issued. So number of shares issued at the end of 2009 times 100 if we want our answer to be in cents. Okay, so ordinary shareholders' equity, I'm going to my balance sheet. And if I go to my balance sheet, I'm looking at my capital and reserves. So remember guys, capital and reserves, this is another word for shareholders' equity and is made up of my ordinary share capital and retained income. So that gives me a figure of 3,120,000. So let's take that through. Okay, let's just go further down. Okay, so 3,120,000. And I'm now going to divide this by number of shares in issue, which was the information I mentioned right at the beginning. So the number of shares in issue at the end of the year, guys, this figure was included, but for some reason I kind of missed it, 417,000. So you didn't have to calculate that figure. It was part of the information. So let's divide that by 417,000. Okay, so divide that by 417,000. And again, let's get our calculators out. Okay, so 3,120,000 is our equity. Divide that by number of shares in issue, 417,000. Okay, and that gives me a value of 7 Rand 48 cents. Okay, or 748 cents if I multiply that by 100. Okay, so remember guys, again, we'll get to the interpretation in a bit, but net asset value tells me what is the actual worth of my shares, right? So according to the balance sheet, according to the books of the business, my shares are worth, one share is worth 7 Rand 48 cents. Okay, right, we're down now to the last calculation and then we can do a bit of analysis. So the last question wants us to calculate the debt equity ratio or the gearing ratio. So again, a very simple calculation, shouldn't be too difficult, and please make sure that it's often asked in the exam, so please make sure that you guys get this one here correct. Right, because it's easy guys, you want to get those marks for something that's quite straightforward. Right, so your debt equity ratio, so obviously debt equity ratio again for 2009, So for this ratio, we're looking at shareholders' equity and we're comparing that to your non-current liability. Right, so I just want to write that down. Non-current liability, non-current, let's fix that. Non-current liability is being compared to shareholders' equity. Right, so let's start filling in the figures. Shareholders' equity, remember guys, we came across that earlier on. So there's my shareholders' equity, 3,120,000. So let me fill that in so I don't have to go back to my balance sheet. And now let's go to non-current liabilities. So obviously we've got to now go back to the balance sheet. So my non-current liability, okay, there we go. So non-current liability, an amount of 300,000. So let's take that through. Okay, non-current liability, 300,000. Okay, right, and then a straightforward ratio calculation. Again, I divide 312. Okay, and then I do the same here, divide by 3,120,000. Okay, so I'm getting a ratio of, okay, let's do that together. So 300,000, okay, divided by 3,200,000. And guys, just be careful of the zeros. Let's just fix that. 3,120,000. I think that's correct. Okay, and we are getting a ratio of 0,09, or if I round that to 0, let's just go back there. I just want to quickly check. Okay, so we're getting a ratio of 0,1 is to 1. Okay, I just rounded it off to the nearest decimal. Right, so we're done with the calculation. Debt equity ratio, guys, very, very important. Remember, here we're looking at how much does the business rely on borrowed capital versus your own capital.